everybody. Welcome to Mortgage Mondays. We're here again this week with Jeff Mejia from Obsidian Financial Services. Today, we're going to be talking about VA loans. VA loans is a big question that has been coming up lately. I particularly like this product that is offered. And I'm going to let Jeff tell us a little bit about what a VA loan is, and we'll have a discussion on that. Jeff, take it away, buddy.
Good afternoon, everybody. Happy Monday. Hope everybody's doing well and being safe. As Larry just mentioned, yes, the VAs is a very popular product. One of the major and the highlights of the VA is that obviously it's 100% financing. So there is 0% down for the veteran, depending on the veteran himself or herself and the lack thereof of their DD-214, which is a form that states how long they've been, if they're disabled, to what percentage. If not, will tell you, will have, I guess, a recourse on the funding fee, which is basically the part of the VA. Some people have, no funding fees because they're 100% disabled, et cetera, et cetera. Now, you can do a VA with as low as a credit score of 580. And the major caveat to the VAs is basically you have to have a clear termite inspection. That's like their thing.
Termite inspection. Who would have thought that the lending process will be held up by a termite inspection?
Yeah, they have to have a clear termite inspection. And with the VA, it allows the seller to contribute up to 4% seller contribution.
Oh wow. Okay. So VA loan is for anybody that has served in our military, correct?
That is correct, and has been yes,
honorably discharged, right?
That is correct.
Okay, so that's a big thing too, right? So this is a way for you on the mortgage side and for the government to say thank you for your service, and this is one of your benefits that you receive for honorably serving our country, right?
That's correct.
Okay, so is there a cap on how much a VA loan will cover for you?
No, they don't. They actually don't have a cap, kind of like what FHA does or anything like that. They do not have a cap.
Okay, but I can't go and buy $1 million property, right?
You have to check. Actually, that's not true. You could. It does allow up to, I believe, I think it's like 750,000. I think it is. For just a regular VA, then you have what are basically you have the high balance VAs and stuff like that. So those go up higher, but obviously that high balance has to be in an area or geographical code like zip code, stuff like that. It has to be recognized as a high balance area.
Right. So basically, in a nutshell, there are guidelines that you have to follow through to get these VA loans. So let me ask you this: how does somebody apply for a VA loan? I know we went over it last week with the FHA process, and I know they're both government products, but tell me specifically for a VA loan, how does somebody get a VA loan?
Well, the first thing we do, obviously, is just like whether it would be an FHA, a conventional, we have to get them pre-approved. We ask for a little bit different documentations for VA, which is like a standard DD-214, which is their VA document that states if they have eligibility. Then
okay,
we can from there.
Certificate of eligibility, right?
Well, that's a DD-214, which will give them like their ID, their military ID number and everything, and that allows us to pull the certificate of eligibility.
Okay.
The CEO, which basically will tell us what percentage if they were discharged and what percentage they get charged on the funding fee. If they're disabled, we get all that information from the VA. Then at that point, we pull credit. We look at if there's any income, whether it's disability. Most of them, unfortunately, half the time when you do a VA, most of the time you're going to see disability, Social Security, stuff like that. Then of course you do see those people that are still working. So we have to take all in consideration when putting the numbers together and pre-approving them thoroughly.
So first thing that they would have to give you is proof of military service, right? And that's
correct.
Through your what's that form again?
It's a standard DD-214. DD-214 is the form.
DD-214, right?
Derek 214. DD-214.
Okay, DD-214. So that form will that be proof of military service, or
that'll give us pretty much everything that we need, and then from there we on the back end start ordering all their certificates of eligibility to see exactly if they have disabled, if they're part disabled, if they're full disabled. So that dictates what type of funding fee, if anything, they're going to be charged from the VA.
Okay. So now here's the question that I've had a lot, right? And I've heard I've heard all kinds of stuff when with regards to a VA loan. You know, the VA appraisers are more stringent on it. I don't like taking them. For me, like you started off this conversation with me, you know, these are guaranteed loans, right? These are pretty much if their requirements are met, and you don't have termites, like you said earlier, right?
Right.
If the house doesn't have termites, you can pretty much lock in that VA loan as the property has been sold, right? Um,
That is
uh,
correct.
Assuming that the appraisal and all the other contingencies are met, but that's with every transaction, don't you think? I mean,
Yeah.
it's not any harder, or but on the mortgage side, it's a little bit more secure. What do you think?
Well, definitely, it's more secured because obviously, had you like you mentioned a few minutes ago, the government is giving back to these people who put basically their life on the line for our country and allow us to live the way we're able to live, you know, with freedom of reign and with everything that this great country has to offer to us. So the government is, I guess, in a way, gives back to these people by not only giving them obviously 100% financing, but depending on their discharge, whether they're full disabled or not like that, they give them different discounts as well. One of the major caveats also with a VA is, like I mentioned, is 100% financing, but also they have no mortgage insurance on that loan.
Mhm. So the affordability is a greater on that as well, because now you don't have to take the MIP and uh, the the mortgage insurance into uh, consideration, right?
Correct. And I'll give you another example about affordability since you just touched upon. Let's just say that we have Mr. Smith, who is 100% disabled, and he's got his letter from the VA saying that he is 100% disabled. That particular borrower will be exempt from property taxes.
Mm,
So that gives you more of affordability because now you can underwrite them without even, let's say, for example, somebody goes and buys a property in Parkland.
right.
Those taxes are going to be anywhere between $7,000 to $10,000 very easy. So
Yeah.
when you're not calculating that payment of that monthly tax bill, that allows you to qualify for more home as well, as long as you're at 100% disabled.
Now, my years in the property appraiser's office that I've spent many years doing that, I do know that is something separate that you have to apply for through your either your property appraiser's office or your taxing uh, office,
That
whatever
is correct.
you have in your county, right?
That is correct.
But that makes a huge difference, though, right? So if you're buying a house that's 570,000 and your taxes are $12,000 or $11,000, and you no longer have to pay that, that's shaving another $1,000 per month off of potentially what you're paying in taxes, right?
That's
So
correct.
so I like this conversation because I've seen people shying away more and more from the VA loans, the FHA loans, these government loan programs, right? And I want people to really understand that when you do that, you're limiting your buyers, right? And there are a lot of qualified buyers that actually utilize these government programs, specifically with the VA loan. I married into a military family, right? My father-in-law being ex-Air Force, so I know that the ability to pay is not determined by the type of loan that you're utilizing, right? Um, so I just want to say, what have you been seeing on the acceptance rates for VA loan versus people specifically wanting just conventional?
Well, it's a funny thing you asked that because what I've noticed, it depends on, I hate to say this, but it just depends on how experienced that listing agent is.
Right, right,
If they've been through an FHA loan and they've had a pleasant experience, then they understand all the ins and outs. And then there are sometimes, sadly to say, there are some lenders on the streets that just make this process unforgivable, and most people get a sour taste. So they shy away from
right,
taking the next FHA or the next VA because they don't want to go through that experience.
right, right. So I guess it's really chalked up to whatever the experience is. Just like with everything else, you have good ones, you have bad ones, right? So without straying too far from the topic, I do have, how does somebody from start to finish, just quickly explain it to me, apply for their VA benefits, go through you to get a VA loan to get to closing? Like how is that process done? What's picked for them? Is there anything picked for them? Do they have to go through specific lenders? Do they have to use specific appraisers, title companies, inspectors? What's your experience on that?
Okay, so obviously, like I said before, obviously whether it's VA, FHA, conventional, et cetera. Obviously, for VA, we have to document a little bit more and grab a certain couple of documents that allows us we're dealing with. Once we have that information, we do the process, the pre-approval. We put that pre-approval letter in his hands or her hands, and obviously in the realtor's hands. At that point, they find the property, and now we start getting into submitting the files and ordering appraisals. Well, the appraisals, the VA does have their own appraisals they want us to use. They have to be a VA certified appraiser.
Okay.
So they go out there and they do their due diligence. Typically, the VA appraisals take a little longer because, as you know, obviously there's not every appraiser is VA certified. So the list of those appraisers condensed compared to a residential for an FHA or conventional. Once that stuff gets through, they can use any title company. They're not prone to have to use, as per se, a VA approved title company. It has nothing to do with that. They can go through anybody that can generate a VA loan or VA approved lenders like ourselves. Obviously, mortgage brokers will send it out to their third party lenders that they are brokering it out. But with us being we're the end lender, we're underwriting everything in house as well. So we're just literally selling off the VA after it funds. We're selling that loan off.
So is that an actual government loan, or it's just a government backed loan?
It's a government backed loan.
So same thing, same principle, right? So
Yes,
as what we discussed last week with the FHA. Okay. Is there anything specific that needs to be known about a VA loan and the process that you could think of off the top of your head that most people tend to overlook? Because it sounds like to me, I would actually say that the timing, right? This is not something that you're typically going to close in 25, 30 days. Like you said, there's a smaller pool of appraisals that may take a little longer. There's inspectors that you may have to meet certain VA requirements on the inspection, like the termites, which is separate. And maybe when we talk about a little bit more on the inspection side, we'll bring in a third guest with another inspector that we work with, right? But for the sake of what we're discussing right now, it sounds like it may take more than the 25 or 30 days that you would typically see on a conventional loan, right?
I would say typical would be more about 45 days, 30 to 45 days.
45 days.
Yeah.
And you think that that's a safe number to go through on when a listing agent's filling out a contract, even when a buyer is working with a buyer's agent to fill out a contract. Okay, we're going to close in 45 days versus 25 or 30 days, right?
Yes, I think 45 is a very safe number.
So when you would go through this the VA process, right? What are some of the criteria? I know you mentioned a little earlier that you have to have a 580 or better, right, on the credit score. You have to be obviously honorably discharged from military service, right?
Correct.
Is there any other criteria that needs to be addressed prior to applying or maybe during the application process?
No, I mean, it's pretty standard. I mean, obviously the 580 credit score, if you will, that becomes what is called a manual underwrite. So now your debt to income ratios become really, really tight because you're never going to get a DU approval. So it's going to get a refer. When you get a refer, it has to be manually underwritten by an actual person. Once you get over that 620, 640 credit buffer, then you're able to run it through DU and get a DU approval. Then it becomes an automated approval where then you can push your debt ratios pretty close to what FHA allows you, 56, 56.5, 56.7. So it allows you to buy more home, where if you got that 580 credit score, your income kind of gets condensed and you can't be as aggressive with the debt to income ratios.
So for me, I love to see these VA loans come through. That means that we're housing our servicemen and women out there. I love to see these VAs benefit loans because to me, as a real estate professional, I'm looking at it like it's a guaranteed loan, right? As long as they meet the criteria that the mortgage company is requesting, the guidelines set forth by VA, I mean, it's a slam dunk. That's the way I look at it, right? If the price of the house is priced correctly, everything falls in line, you never really have an issue with it. And that's my experience, right? And I've
Correct.
actually had sold properties that have been purchased with VA loans. So I've actually seen this firsthand. And it was a pretty easy process. You know what I mean? In my experience, it has been. What are some of the pitfalls that you've seen that, and we already talked about the termite inspection, right? And that's going to be the joke of this whole video today is the termite inspection, right? But we've seen the termite inspection, right? So that may be one of the pitfalls. Anything else that you can think of that you may see?
No. I mean, that's typically where these files happen to fall apart is with the termite inspection, typical, you know, because everything else after that is a standard loan, appraisals, income docs. It's all the same at that point. It's all looked at the same and underwritten the same. But for the VA, their major caveat, like I said, is it has to have a clear termite inspection report.
So let's talk about let's take it piece by piece. Let's talk about the appraisal. Have you seen, in your opinion, right, that the certified appraisers that go through these VA loans, that they're, you know, like I hear out in the industry all the time, they're so much harder to appraise the property for the value? Well, look, I was an appraiser for a long time, and the position I take on it, if the appraiser doesn't feel like the property is worth that, it's probably because it's not worth what the sales price is, right?
Right.
On a lot of cases, we're excluding, and I hold myself harmless in this, we're excluding, you know, a material mistakes of fact, right? They have the square footage wrong, they missed the bedroom, stuff like that, because that happens. But other than that, they're pretty close to what the appraisal value is going to be, is pretty close to what the market value is going to be based on the comparable sales in the area. At least that's my opinion on it.
I agree with you.
And I think that, you know, when properties are priced correctly and you have the correct seller disclosure and you let people know everything that's going on with the property, it gives you less reason to see things going wrong in the long run, right? And this is for, you know, my purchasers, my sellers, my agents, all the audience, all together, right? When we tackle these things up front, and I don't know if you want to chime in on this as well, but when we tackle these things up front and we know what we're getting ourselves into, it gives us a better opportunity to kind of just manage what the expectation is, what the potential pitfalls may be coming into, you know, closing this deal, right? Because the end result is getting it to the closing table, right?
Correct. You know, when it comes to appraisals, like you said, if the comparable sales are there, more than likely he's not going to miss. He's going to come in on the mark. Now, if the information is pretty blatant and the property is being pushed with no solid foundation to back up that value, well, we're going to find that out as well.
Right.
Now, sometimes people do make. We're all human beings. That person could be tired, could have had a bad day. You never know that, you know, all the ounces that come through it. But if there is a mistake with a square footage, the case may be, we can identify it. And as long as we can highlight it, acknowledge it, and demonstrate that he missed something, then we just submit for a rebuttal.
Right.
And if the information that he missed, well, then he'll fix it. But if we're giving him comparables on something that's not comparable, or we're going into a subdivision, you know, can't compare an apple to an orange. It's just not going to work.
So overall, I think these VA loans are a great loan program. I think it's a great benefit to our service members that served our country. I don't know what your take is on it, how much harder it is for you or not as hard for you on your end. But I know that you're available to answer any questions that anybody has regarding that, right?
Agreed. Anybody who has any questions, please feel free to reach out to me. Obviously, every scenario is different. Every situation is different. Every buyer is different.
Right. So in the comment section down below, you'll find all of Jeff's contact information as well as mine if you have any questions on a VA loan. Jeff, thank you so much for this week's discussion on VA loans. What we'll do is next week, we'll answer any of the questions you've had. We'll start out this session that way. And if you could, please like and subscribe. And Jeff, I'll see you next week. This is our second week doing this, and I'm very happy that we're making it very consistent so people can gather any information. Anything you'd like to say to anybody, Jeff?
No, thank you again. Like I said, and like Larry just said, if you have any questions, no, please.
Well, Jeff, thank you again for being here. Thank you for sharing your information with us and your knowledge. I'll see you next week.
See you next week, same time, same channel.